Hello, property navigators. Welcome to our dive into the property investment landscape of Australia's East Coast. Now today we're navigating through the opportunities and stats that make East Coast Australia an enticing spot for investors. East Coast Australia, comprising the states of Queensland, New South Wales and Victoria, is home to about 80% of the country's population. This region is the powerhouse of growth, contrasting sharply with the West Coast, which, while beautiful and resource rich, houses a significantly smaller proportion of Australia's population. Data in PEX's 2023 calendar year Property Insights report, just released in February 24, shows more than 670,000 properties were bought and sold in Australia last year, being 2023, worth a combined value of around $613 billion. ABC News published that PEXA also found $454.7 billion worth of residential property was purchased in these three eastern states alone in 2023. That's 74% of all of Australia's total residential property dollar sales coming from Queensland, New South Wales and Victoria combined. ABC also published that PEXA's research found 28.5% of all of these property sales in Queensland, New South Wales and Victoria during 2023 were paid for with cash, so no mortgage. That's 1 in 4 properties sold, which is an astonishing $129.6 billion in 1 year. Now that's a lot of cash underpinning these markets. Let's start by breaking this down by the three main East Coast states and their capital cities: Brisbane in Queensland, Sydney in New South Wales, and Melbourne in Victoria. Starting in the north with Queensland, known as the Sunshine State. It boasts the largest land size with a long, beautiful coastline. Queensland's economy is Australia's third largest, sustained by sectors such as tourism, agriculture, and mining. Brisbane, its capital, is Australia's third most populous and is known as the River City. Brisbane's market is the most affordable out of the three capitals and has had substantial growth over the past few years. As of the Australian Centre for Population's 2023 statement, 2.6 million people lived in the Greater Brisbane area, representing 49% of Queensland's population. Queensland's population was 5.3 million and is projected to reach 6.3 million by 2033 to 2034. Queensland is expected to retain a 13% share of national net overseas migration, continuing to have the highest interstate migration of any state or territory in Australia. Heading south next, we have New South Wales, home to Sydney as its capital, a city with a global footprint known for its iconic Opera House and Harbour Bridge. The city's property market is our most expensive, but its global appeal presents unique opportunities for high capital investors. New South Wales has the largest economy of any state in Australia, with service industries making up the majority of the state's GDP. As of Australia's Centre for Population 2023 statement, New South Wales is Australia's most populous state and is projected to remain so over the next decade, growing from 8.2 million people to 9.5 million people by 2033. Population growth in New South Wales is driven by net overseas migration, having the highest percentage of migration than any other Australian state or territory, and it's projected to stay this way through to 2033. The population of Greater Sydney was 5.3 million, making it Australia's largest city, and has 65% of the New South Wales population. And finally, and the furthest south of the three states, is Victoria. Its capital, Melbourne, is well known for its vibrant culture, arts and coffee scenes. Melbourne's property market has plateaued recently, which we'll get into the details of pretty shortly here, but it has had steady growth consistently over the past decades. Victoria has the second largest economy of any state in Australia, with financial services being the largest industry in the state. Australia's Centre for Population 2023 statement says Victoria has a population of 6.6 million and is projected to reach 8.2 million by 2033. It goes on to share that Greater Melbourne had 5 million residents, accounting for 76% of Victoria's population. Due to strong internal and overseas migration, Melbourne is projected to overtake Sydney to become the largest city in Australia in 2031 to 2032, with a population of 6.2 million, and then grow to 6.4 million by 2033-34. Now let's compare these three property markets side by side. Market comparisons. Kicking off at macro level, let's talk about how the Queensland, New South Wales and Victoria markets have performed and are currently performing. Using data from the PEXA Property Insights report for calendar year 2023, we can see Queensland topped the country for the third year running on the volume of residential sales settlements, with 176,000 recorded, accounting for more than 26% of all residential sales for the nation. New South Wales then came in second with 167,000, and then Victoria very close behind with 166,000. So Queensland for the last 3 years has had the highest number of properties sold than anywhere else in Australia, and by a fair amount too, over 8,500 more settlements than New South Wales. But look at this. New South Wales only has 1,000 more property settlements than Victoria, so it's actually pretty close between those two when compared to Queensland being way out in front. Now this shows the health of the Queensland market with loads of activity, but this is specifically for the volume or number of property sales. When it comes to the spend or the dollar amount generated from the number of actual sales, New South Wales posted the highest amount spent on residential property in calendar year 2023 at over $192 billion. So they had a lesser number of sales than Queensland by a long shot, but a higher amount of money made on the sales that they did have. Victoria came in second at $135 billion worth of sales, and then Queensland in third with $127 billion. And this absolutely sounds right. Why? Well, a good place to start is by looking at the median house prices in each of the greater capital city areas. Now, as published in the Financial Review, Oxford Economics estimated that as of March 2024, Brisbane's median house price was $818,000. Sydney's was $1.6 million, and Melbourne's median sat around the $1 million mark. And this really uncovers some key attributes of these three markets that we can break down even further. Brisbane's median house value is literally half that of Sydney's. So the fact that Sydney made so much more in dollar sales than Brisbane, even though Brisbane had over 8,500 more actual property sales than Sydney did, makes sense. On one hand, we have a very active, much more affordable market being Brisbane. And on the other hand, we have a market that is almost double the price, so less affordable, and it is active, just not as active as Brisbane by quite a long shot actually, especially if you factor in the huge population difference between the two, with Greater Sydney being double the population of Greater Brisbane. So how does Melbourne fit into all of this? Well, again, a massive population of 5 million people, almost double Brisbane's and nearly the same as Sydney's. Now, Melbourne came in last out of the three states for the number of property sales, having 1,000 less sales than Sydney, and its median house price is about 18% higher than Brisbane. Melbourne made $7 billion more than Brisbane did in dollar sales, but nowhere near the dollar sales as Sydney, which was $65 billion more than Brisbane. So what does all this mean? Well, let's compare Brisbane and Melbourne, leaving Sydney out for now as it's clearly running its own race. Now, Daniel Butkovich, property journalist at realestate.com.au, summed it up perfectly in his article. Melbourne has had higher home prices for the past 14 years, but with more people leaving the city and Brisbane experienced a population boom, price growth has been much stronger in the Queensland capital. Dwelling prices, which include both houses and units, are up 60.7% in Brisbane since the start of the pandemic, compared to only 16.5% in Melbourne, with both cities now having a median dwelling value of around the $797,000 mark, according to the latest March 24 PropTrack Home Price Index. According to PropTrack senior economist Eleanor Cray, this price parity is partly a result of differences in the housing composition of each city. A higher proportion of Melbourne properties are units, which skews the median value lower. A limited supply of properties on the market in Brisbane has helped push prices up. She goes on to say that Melbourne, on the other hand, has much weaker price growth amid large population losses to other states and regional areas. More recently, buyers in Melbourne have consistently enjoyed more choice relative to other markets, with the total number of properties listed for sale shifting above the decade average since midwinter, contributing to the lagging home price recovery in Melbourne. The supply of properties listed for sale in Brisbane has been constantly tight since the pandemic onset, while at the same time the city has experienced record net population inflows from the southern states. Now let's talk about infrastructure. As you have constantly heard me talk about in these videos, state infrastructure spending is important to track as it's a good indicator on the potential future growth and in what areas. For this purpose, I'll reference the 2023 and 2024 Australian Infrastructure Budget Monitor, covering off some key insights across Queensland, New South Wales and Victoria. Now, to try and show a more even comparison, this report focuses on total spend of each state government and presents it as a percentage of each state's budget, ultimately then ranking them. Victoria takes the top spot in Budget Monitor rankings for the third year running, allocating $78.5 billion to infrastructure over 4 years, constituting 20% of its total general government expenditure. Despite a $6.8 billion decrease on its financial year 22-23 allocation, Victoria remains above New South Wales, who took second place with an $85.6 billion infrastructure spend, representing 16.6% of its general government expenditure, down $2.8 billion on its financial year 22-23 allocation. So both of these states have decreased billions of dollars from their budget in infrastructure. A standout here between these three East Coast capitals is Queensland. Now, Queensland's 4-year allocation for infrastructure stands at $45.3 billion. But what's important to note is that this is an increase of $13.4 billion over the last 2 years. Queensland represents the greatest shift in this year's rankings because for the second year in a row, the government has had the largest increase of any jurisdiction, with successive 19% and 21% increases in expenditure year on year. So while Victoria and New South Wales have reduced their infrastructure spend, Queensland is really ramping up now and has for the past couple years. And this is unlikely to stop given the huge amounts of internal and overseas migration we are seeing. In fact, if these trends continue, with Queensland increasing by 20% each year and Victoria decreasing by around 10% each year, which is probable given the health of each state's budget, which I'll discuss in just a moment, the rankings in future years may really start to move around and tell a different story. Time will tell. State budgets. This brings us to the health of each state's budget. Currently, Queensland is the only state that has recorded a surplus, and in fact has recorded the highest surplus in the state's history at $13.93 billion. The surplus is $1.6 billion higher than estimated in the 23-24 budget as per ministerial statements. Contrast that with Victoria, which has an estimated $4 to $10 billion deficit in years 2023-24. No one really knows yet. And New South Wales, which is estimated to be in a massive $9.6 billion deficit result for 23-24. This is not only important to understand it as an investor, but it means you should seek further information and do your research. And here's why. As per the Real Estate Institute of Victoria, property taxation accounted for 43.6% of the Victorian state government's revenue base for financial year 2023 to support its budgetary commitments. Further data from Victoria State Government's Treasury and Finance indicates that in financial year 22, property tax accounted for almost half of the state government's tax revenue at 47.5% of annual income. Now, this reinforces that the Victorian government has a huge dependence on taxing the property sector to meet its budget. It has to. They have no other choice. And they could continue to tax at higher rates and even introduce more property taxes at any time. And this is evidenced in the fact that last year, the Queensland government abolished its proposed land tax reforms, while the Victorian government increased its land taxes significantly by adding an additional temporary COVID debt land tax surcharge, which results in an $8.6 billion increase in land tax payments for all investors owning more than $50,000 worth of property and $25,000 for trust. It's insanity. Landlords in Victoria are already exiting the market in droves, hence the excess housing supply down there. And this could exacerbate the issue even further, especially as investors begin receiving their new land tax bills this year. Add to this Victoria's current level of debt. By 2027, the state will have a debt higher than New South Wales, Queensland and Tasmania combined, and could be paying $33 million per day in interest on that debt. As an investor, this really matters because you need to be risk mitigated, and that includes being abreast of policy and policy change implications. Let's wrap this up with some key outtakes between the three markets. By comparing and contrasting these three markets, there's a clear gradient from Brisbane to Sydney to Melbourne. Each city caters to different investor profiles and presents different entry points and opportunities for investors. Sydney, with its much higher pricing, attracts investors looking for premium properties and higher paying tenants. This isn't a market many everyday Australians can really afford to dip their toes in, especially on their first or second investment property. All in all, if you have the experience and cash to spend big on your investment properties and like Sydney, go get amongst it. I'll leave our conversation on Sydney right here for you to research further if that's your cup of tea. Now, Melbourne and Brisbane are both in the price range for most everyday Aussie investors, with Melbourne having many more units in its overall inventory. But as we know, house prices appreciate in value much better than units, so that's the preference here. Both Melbourne and Brisbane are very similar in terms of median house price. And at the moment, there seems to be more supply in the greater Melbourne area due to large-scale internal migration to other states and investors exiting the market. Property values have lulled for a bit due to this, with supply outweighing demand, but that will ramp up again as Melbourne's forecast shows that it will overtake Sydney as Australia's largest city come 2031 to 32. So there will have to be growth in markets down there. However, as an investor, you really need to weigh up the fact that Victoria's state government relies so heavily on property taxes to float the state budget, making up between 40 and 50% of all yearly revenues year on year. And their budget deficit is huge, leaving their budget a mess, all while they have decreased their spend on infrastructure. So there is a real possibility, given the state's future outlook, that the Victorian government will rely on property taxes even heavier into the future. Lastly, we have Brisbane. Now, Brisbane has had some solid population and market growth over the past couple of years and has really forged its own path from the little town it was always known for. Now, because of these pressures, at the moment supply is tight, which could ease over time. The state is very healthy in terms of budget and surplus and doesn't rely on the property taxes as primary revenue. Prices are still very affordable and population growth is high, with Queensland having the highest amount of internal migration over the next decade. Infrastructure spend has also been the highest percentage increase seen for 2 years in a row now. Another thing I want to add here is the easy access to additional property markets in southeast Queensland. Now, although Greater Brisbane and Melbourne share the same or very similar median price, in other parts of southeast Queensland which aren't considered Greater Brisbane, such as Toowoomba, which is only 90 minutes away, investors can buy quality foundational investment houses on good blocks from anywhere from $450,000. Any such comparable growth markets that are as close to the capital city as these are much more difficult to find in New South Wales and Victoria. In my opinion, given the discussion and analysis we have taken today on state budgets, taxation policy, future population growth, infrastructure and affordability, I would be certainly taking a real good look into the Greater Brisbane and the Southeast Queensland markets, if you're in the budget range of, that 450 to 800,000. Thank you for joining me today. We love making these videos. Now, if you think Brisbane and Southeast Queensland are areas that suit you as an investor and you might be interested in investing, I really suggest you check out this video here where we go into a deep dive of the Greater Brisbane area and also a deep dive into Southeast Queensland and what both the areas are. Until next time, happy property navigating.